The struggles of trading full-time after quitting job. My name is Jeff. I'm a U.S. Marine Corps vet, 8 years straight out of high school, 10 years plus truck driver. I no longer truck drive. I recently quit trucking. And I've been trading options for 3.5 years on S&P 500. I'm making a video of the struggles of trading full-time after quitting job because I recently quit. Now, risk of ruin versus point of economic impact. In trading, only two things matter: size and your expectancy. Whatever you're trading, does it have positive expectancy? Yes or no? Size is the fodder that you feed into your formula, and if you have positive expectancy, you get back more size. If you have negative expectancy, then you lose money. The risk of ruin is total loss. So, within trading, there are two things that can lead to risk of ruin. Number one, trading something with negative expectancy. So you lose money over time. Eventually, you will lose all of your money. Number two is you're trading something with positive expectancy. Even though it has positive expectancy, nothing works forever. There's periods of drawdown. And based on your size, you encounter a drawdown that leads to total loss. So those are the two ways within trading. Now, the point of economic impact, this is the holy grail of where we're all trying to get to with our trading account. That's the point where your size is big enough to weather the drawdowns of that could lead to risk of ruin, and large enough that you have enough money that you never go to zero because it has positive expectancy. The more you trade, the more money you get back. And the third effect is where you can draw from your trading account, where you can live off of it. So all of those factors is the point of economic impact. Now, in my current trading, I've encountered specific struggles that can lead to risk of ruin on the path to the point of economic impact. So I'm trading something with positive expectancy. I was doing it on a day trading short-term intraday, but then that to me, it didn't work out because I'm trading with a cash account, and I ran into limitations with the cash account. And because I ran into limitations on the cash account, I had to make adjustments. I didn't throw my entire strategy away like most traders do. I just tweaked it, made adjustments, expanded my time frame so that I'll be able to avoid the limitations of a cash account. Now that I'm swing trading, the other issue that I'm running into, because I'm trading something with positive expectancy, if you are trading something with positive expectancy, you do have drawdowns. And so my main struggle with this swing trading that I'm doing, there's going to be some heavy drawdowns. Where we are in the market cycle, I hope that we're not in a position where my particular strategy encounters a drawdown, because that'll lead to ruin. In a sense, it is luck, but we shall see. The other thing with size in trading is that when your size is too small, the amount of risk that you have to put up relative to the size of the account will definitely lead to risk of ruin. If you decide to quit your job and transition into trading, you need a way to pay bills if you're not yet at the point of economic impact. And the way that I do that now is I teach. I'm not sure if you've ever heard the 10,000 hour rule. It takes 10,000 hours to be world class at anything. Well, I've completed about 3,500 hours of study, specifically options on S&P 500. For the last, 3.5 years, that's literally all I've been doing every waking hour. Well, not every waking hour, but a massive chunk of it during my busy trucking time. Like, as I drove, all I had time to do is think and ponder, come up with different strategies to, develop my understanding. If you are open-minded enough to believe that you can learn from anyone on anything at any time, then I offer my teaching services if you're interested. Now, let me teach you something real quick. What I'm about to teach you is perfect for a person who's busy with life or busy with work. Since I transitioned out of trucking after 10 years, I realized I'm still too busy to be sitting around in front of a chart all day because I'm busy with life, taking care of my son and my family. I also realized day trading is not really possible in the way that I would like because it's still going to be taxing my time. And if you found that same issue, then what I'm about to show you next will help you maintain your ability to trade while managing your busy life. The first step into basically doing this is we have to model the perfect day. And we got to break down the key metrics by time throughout that day of what we modeled. And the work that we do over here is going to create what I call a traffic signal: red light, green light, or a yellow light. And the reason why this is important is while you're trading, because we will trade in such a way that it allows you the freedom to basically be busy but monitor your trades as you go, because all of the work is front loaded. You front load all of your decision making so that when you're on the fly, on the move, on the go, you don't have to think too much because you've already done the heavy lifting up front. It's like you do the work up front and it pays dividends forever. So these traffic lights, this is what triggers us to enter a trade. If it's a red light, we don't enter the trade. If it's a green light, that means we need to enter the trade. If it's a yellow light, that means, hey, you need more thinking on this trade. And when it's a yellow light, when you see the yellow light, you have a decision to make at that moment. Like, it's yellow. Do I have the time to think through this trade or no? And if in that moment you don't have the time to think through the trade, you pass on it. You move on. But if you do have a moment, then you can consider entering the trade or not. But this first step right here is critical because this is what allows you to enter the marketplace on the fly, on the go. Okay, let me see. Now, here is my model day. November 14, 2023 at 9:45 a.m. The market had gapped up. This is SPY, S&P 500. It gapped up on inflation news being the inflation decreasing. And the sentiment is the Federal Reserve is going to stop hiking interest rates. This was about 2 years ago. And these are the metrics that we measure. Advance, 1200, volt, 43, cumulative tick, 8,000, sectors, half green, price action, gap, and hold. I'm about to show you what this looks like. And in Thinkorswim, we're looking at November 14, 9:45 a.m. on demand. And as you can see, you see this advance, $ADD on Thinkorswim. It's at 2,300. That's huge. Then over here, $VOLD, volt. It's at 86 million. Huge. And then we have down here the cumulative tick. This is the tick up here. This is the cumulative tick down here. Don't worry, I'll explain all of this stuff later. But right now, these are the signals. This is how we trade SPY on a trending day. So this is 15K. This is all that we look for. Now on this particular day, let me show you. Go back. This is the SPY chart. We fast forward to, say, 4 days later, November 17th. So I have my charts like this on a quadrant so that I can have a big picture view, a wide view of what's happening. On the top right corner, this is the daily chart. As you can see, this was November 14th. And there was a huge gap up, and then price held this level several days later. This is important because this is our model day. That means this day sets the benchmark that will allow us to trade. On days that don't resemble this day, we don't trade. That's a red light day. Days that resemble this day, we trade because that's what signals us that we have a high probability chance to make some money because we only get paid when price moves. All right. I'll go over more details on these later. Now that we have our signals, they are the framework for the traffic signals that we're going to build, and it will help us tremendously manage our trades while on the go. Okay, join the community down into the link if you want to work directly with me. I teach now, so if you're willing to learn, if you believe that I can teach you, I can help you along. Join the community below or book me for one-on-one coaching. Thanks.